Hi everyone. Today we're going to talk about what is an asset and a liability. It's going to have some examples and we're going to talk about how to write about them in a case. But before we start, would really appreciate if you guys can like the video and subscribe to the channel. Thanks. So now let's get into what is a definition of an asset. Based on the handbook, the asset definition is a resource controlled by the entity as a result of a past event and from which future economic benefits are expected to flow to the entity. If you're confused by this, you're not alone. I was confused by this a long time ago. And that's why now we have a simplified definition, which is an item that a company obtained in the past and presently has control over that will provide future economic benefit. The three key words you need to remember are on the right, which says past, present, and future. If you remember these three words, you'll figure out what is an asset, and later on, you'll figure out what is a liability. So now let's go into the examples of what assets are. There could be tangible assets, there could be intangible assets. Tangible assets are things that you can touch and feel. These are the things that are physical, that are real. There's intangible assets that are things that you cannot touch or feel. So it's hard to say that I have goodwill or I have a patent, right? These are not something that I could just show someone in front of them. But either way, tangible assets or intangible assets are things that are of value, and if you're like me, they're also things that you'd probably like to steal from your friends. So now let's go into how to write about this in your case. So I'd always start off with, as per IFRS or ASPE, an item is an asset when all of the following criteria are met. So the first criteria is that if it has a past transaction, second one is that it has a present control, and the third one is if it has a future economic benefit. Regardless of if you're using IFRS or ASPE, the three criteria remain the same. The only reason why I put IFRS or ASPE, it's because it depends on the case that you're writing. If your case is about IFRS, you put IFRS. If it's about ASPE, you put ASPE. So now going on to our first example. So if this was your case, it says Mr. A bought a truck for his restaurant company to deliver food. Is the truck an asset and why? What I tried to explain to someone is, again, I always put my staple statement, as per IFRS or ASPE, an item is an asset when all of the following criteria are met. And then I'd go through it, right? You'd go through the first one. Yes, there is a past transaction because the truck was previously purchased. There is a present control because Mr. A has the ability to control the truck and drive it wherever he pleases. There is future economic benefit because the truck allows Mr. A to deliver food in exchange for money. As a result, this truck is an asset. Specifically, it's a plant, property, and equipment. For people that really want to do the debits and credits, it's debit truck or plant, property, and equipment, and credit cash. So now let's go into example 2. Mr. C borrowed $100 from Mr. B. Is it an asset? Well, I'd always start again with, as per IFRS or ASPE, an item is an asset when all of the following criteria are met. So does it have past transaction? Yeah, Mr. C previously borrowed money. Does it have present control? Yes, Mr. C currently has the money and can do whatever he wants with it. And does it have future economic benefit? No. There's no future economic benefit for owing someone money, right? It's not good to owe people money, and it's not of value to you to be able to owe people money. So in conclusion, since not all the criteria are met, this is not an asset. So now let's go into what is a definition of a liability. A liability based on the handbook is a present obligation of the entity arising from past events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits. Sounds a little complicated, so now let's go into what is the simplified definition, which is a past transaction that has happened where you now have a present obligation with a future outflow of resources. Again, we're using the three key words, past, present, and future. If you take away anything from this video, it should be those three words And that's what's going to help you figuring out what is an asset and what is a liability. So here are just some examples of what a liability can be. It could be salaries that the company owes its employees. It could be a loan. It could be bonds that it has sold. It could also be contingent liability, right? It could be things that are yet to come that you know that you will be owing people money later on. So to no surprise, let's look at how you write about it, and it's going to be very similar to how we write about the asset issue as well. So again, you would always say, as per IFRS or ASPE, an item is a liability when all of the following criteria are met. Again, we go with the three keywords: past transaction, present obligation this time, future outflow of resources. So now let's go into our first liability example. Mr. A borrows $100 from the bank. So as per IFRS or ASPE, an item is a liability when all of the following criteria are met. And again, we will go through them one by one. Does it have a past transaction? Yes, Mr. A went to the bank and he borrowed money. Does he have a present obligation to pay back the bank? Yeah, he has to pay. Is there a future outflow in resources? So note the word that we're saying resources, but in most cases, resources mean cash. So is there an outflow of cash in the end? And the answer is yes. Mr. A will probably have to pay back the bank in cash in the future. So in conclusion, yes, the money borrowed is a liability, specifically a loan. And for people that want to do journal entries, it's debit cash, credit bank loan. So now let's go into our second example. Mr. A paid cell phone bills for the month. Again, we would always start with, as per IFRS or ASPE, an item is a liability when all of the following criteria are met. So number one, was there a past transaction? Yes, Mr. A paid cell phone bills. Is there a present obligation? No, there's no further obligation to pay your cell phone bills, right? You already paid it, that's it. They can't take anything else from you. Hopefully not. And is there a future outflow of cash or resources? No. So because you've already paid it, there's nothing else. No more bills to be paid, no more cash to go out to these companies. So in conclusion, no. Paying for cell phone bills was not a liability. If you guys could guess, this was probably an expense. As you can see, even though you kind of could tell it's not a liability after you did the second criteria, we still want to show that we went through the thought process of all the different criterias and why it's not a liability in the end. So I'd highly recommend anyone doing these cases to always say met or not met, yes or no to each criteria, and not just stop as soon as they hit a no or a not met. That would really help markers figure out if you understand the concept and really show your thought process. If you made it so far, just want to say thanks for watching. If you liked what you saw, please subscribe, like, comment, and share. If you didn't like what you saw, I'd also appreciate it if you subscribed, liked, maybe not comment, but you could still share. No, jokes aside. Whether you liked it or not, you can still comment on the video, and just let me know. What do you want to see more of? What do you want to see less of? And that would really help me figure out what videos to put out. And yeah, thanks for watching.